one of the scenarios that I will also mention is that, as I said, we have this possibility of forming an M pattern. Okay. Now this M pattern can also form in a little different way, which I posted about on Bitcoin as well couple of years ago, and that's where the Bitcoin started to fall from 67,000 to 15,000. And that video is there, and you'll find a link to that in the description or somewhere on the screen as well. So once the market has gone slightly above, like say all-time high, it can form an extended M pattern as well. So there are a few scenarios which are running here. All you have to do is just look at one of those levels and play around those levels, target one of those levels or enter at those levels, because those levels are the important ones. So gold had a very good week. We were able to capture majority of this move on the weekly basis. So weekly candle has become completely bearish as we were expecting in one of the scenarios. So now let's see what can happen and what kind of levels are expected in gold in the coming days or weeks. Stay tuned. Right. So what we're going to do is, first of all, if you have not watched the previous analysis, please do that, because that is complete top-down analysis with all the scenarios and all the levels. So you must watch that before coming to this one, because this is more of an update to the previous analysis. So what has happened? I already mentioned that we were hitting a 42-year-old trend line or something. Let me see if I'm on log. Okay, and the market could actually produce a delayed reaction. So the market went to that level, fell down, it went up to create a double top on weekly basis, and now it is falling down again. And what you will notice is that in this process, the market has created a weekly bearish engulfing candle, right? Which has started from the high point of this. So that actually, technically speaking, that actually makes it bearish on weekly basis. But because not everybody is trading on weekly basis, so there can be a few ups and downs. Remember, in each and every chart, each and every time frame is fractal, which basically means that each and every chart has its own trend. So weekly can be bearish, but it can still be bullish on daily or 4 hour or 1 minute or 5 minutes or whatever time frame you're looking at, right? But remember one more thing, it's the higher time frame which is running the market. So if higher time frame is saying that I want to go down, then a lot of patterns and a lot of levels on smaller time frames will definitely fail. So that is why you should do multi-time frame analysis. In our FCP methodology, which I teach, in there, multi-time frame analysis is the one of the biggest things. We produce all of our analysis based on multi-time frame analysis. We produce all the opportunities based on multi-time frame analysis, and we start from higher time frame and then we look into the lower time frame. So weekly time frame is telling us that the market can still fall down further down, but there is one little caveat to that. Look at this: the weekly closed above the previous week's low. That produces that that actually tells us that market is right at the support at the moment. Let me grab my pen, and then I'll be able to show you what I mean. Look at this weekly here. Sorry, weekly here is closing here, which is above the previous low, which means that market may bounce up for a few days or even for a week. So because it has not been able to close below, this one is bearish engulfing starting from the previous high. So that qualifies for a double top, but it does not mean that next week is going to be bearish as well. It can be bullish as well because it has been not been able to close below the previous one. Okay, and FCP students will know what does that mean exactly. So if I come to the daily time frame, this is what was happening. The market actually tried on Friday. The market tried really hard to go and close below this, but it did not. It was just on that line. This candle itself is actually causing that bit of confusion that whether it wants to go down or not. So what we need to do is we need to see how the market opens. If the market opens and we get another bullish candle, then it can continue to go slightly higher up and then come back down. If the market gives a very small bullish candle with not much of volume and all that, then it can continue to fall down. So we'll have to see how the market reacts. Why? Because it is hanging exactly at certain point, which is a decision point, right? And if the market continues to fall, then we have few support areas, typical support areas, and right and this point. And in the previous analysis I mentioned that the possibility of actually having an M pattern if the market breaks through this M pattern, and that can actually bring it down to like somewhere around here, approximately 2200 or so, in that approximately. By the way, the analysis that I'm producing here is of good quality, and it has all the levels that you might require. But I do another service which we call as premium analysis service, which is used by institutions and some of the high net worth individuals. They are clients of ours, so I produce premium analysis report for them, which have better levels and better understanding of this analysis, much in-depth analysis. So if you're interested in getting a copy of that, ordering a copy of that, you can do that by finding a link in the description of this video or by contacting us on the Telegram. Right. By the way, Telegram group, you may find the link of that Telegram group somewhere on the screen or in the description of this video, and that Telegram group is completely free. So you are most welcome to join, and I'll show you how that looks as well. So what we have been, I've been personally able to capture a lot of these trades, like up and down, but mostly down, because I knew my bias was towards the short side, and I was able to capture a swing trade all the way down, which is still running here. So this is our Telegram channel, and this is the only Telegram channel that we have got. Vikinsa FX, this is the official one. So if you come here and search for gold, you will be able to find a lot of things, like this is the level that I shorted from, and this is still running, and this is the entire history where we entered. There was a gap and everything. And um, last week we were able to capture a few scalps, which were 4 to 1, 3 to 1, 2 to 1. As I mentioned in the previous video, in the previous analysis last week, that you do not have to capture large moves to be a consistent profitable trader. All you have to do is just trade 2 to 1, 3 to 1, 1 to 1, 4 to 1, 5 to 1, whatever the market gives you. You cannot force your desire onto the market, saying that I only trade 20 to 1, 10 to 1. No, take what market gives you. Right, that's how it works. So you are most welcome to join this channel, which is Vikinsa FX. It's right there, and my ID is Vikinsa on Telegram. So what we can do is we can open up the levels, and what we can see, these are the levels that I gave you last time. Market came very close to that one, and it started to fall down. Now if you should ideally look at these levels on 4 hour or 3 hour time frame, because that's where these levels are coming from. So what you will notice that market actually, it did not actually produce much reaction here. However, market stopped a little bit here, stopped a little bit here, and stopped a little bit here. Now this is a point of confusion. The market may actually try to go and create a little W pattern, and it can continue to go slightly up. So what we need to do is, as I mentioned before, we need to see how the market opens and how the market actually goes above or below. So above this point or goes below this point, and then gives us a confirmation. If it gives us confirmation to short, we will continue with the downside. And if it gives us the confirmation to the long side, then we will manage our short positions, and then we'll look for scalps or short-term trades on to the long side. So that's how it should be, right? And you need to have a plan ready for everything. So what you need to do is, if the market continues to fall down, what are the levels, right? In approximate levels. So let me pause this video for a second, and then let me give you those levels as well. Right, so I'll see you in a second. Right, I'm back now. So I've already placed few levels in there. These are good enough, but if you require better analysis or better levels, then you can contact us for premium analysis report. Or if you are interested in joining our FCP training program, we have a slot coming up very soon. So you can learn to do it yourself, and you can use FCP strategy as one of your trading methods. So now what we have is that all of these levels are there now for you. And why I posted some of these levels is because there is a potential that it can form an M pattern. And if that happens, that these levels are going to act as your targets or potential supports, because the market is falling down. Remember concept of support and resistance, which I mentioned in the previous analysis as well. Each line can act as your target. It can act as your profit target, it can act as your entry level, it can act as your support, it can act as resistance. See, for example, if I have taken a short from here, right, the market may fall down to this line, and if it is going to fall down to this line, this is going to act as support, which means that I should close my short position, right? So at the support, because we buy at support and we sell at resistance, right? So if I've sold at resistance, I should buy at support, which means that I should close the long short position. And what I should do is, like, if I will wait for a confirmation to look for a buy here. Similarly, once the support has been broken and the market comes back here and then performs a retest or something, then it becomes a resistance. And if it becomes resistance, I should be selling it. So this used to be support, now it becomes resistance. This is what we follow in FCP methodology as well. So this is all of these levels can act as support and resistance, and hence your profit targets and entry levels as well. Now we have this trend line running right now at the moment, and that's why that's what market did last time. So on Friday, the market closed below and performed a retest. Now it needs to be seen whether it wants to go back into this trend line or not, whether it wants to fall down into this. So that is why I said we need to monitor coming days very closely. Now there is another possibility which I posted about on Twitter and even in Discord room is this. Now, if this continues to fall down, there is a strong possibility, because we're left with only 1 week in this month of May. There is a strong possibility that this candle this monthly candle can become completely bearish candle. That is a possibility as well. Why? Because the market has closed less than 50% of this, the body is now 50% of the entire length. So if it closes below and it becomes like a bearish candle, then we will have two rejections coming from the top. That will make it even more bearish even on monthly basis. However, if it does not close as a bearish candle, then we'll have to wait for 3 days again to assess the market trend. So this is how we look at the market, and these are the levels. Let me show you those levels once again. And I'll post these charts, or I'll post further guidance in the in our um, Telegram group as well. Now, as I mentioned, I've already have a slot available for FCP training. If you are interested in joining our training program, you will find the details or the brochure of the program in the description of this video, or you can contact us on the Telegram, and then we'll guide you through the process. So hopefully you enjoyed you enjoyed this analysis. If you did, make sure you hit the like button, subscribe to the channel, share it with other traders and trading communities, because they will also be able to take benefit from it. And I'll see you in the next one. Have a great trading week. Thank you for watching. Find and follow us on these social media channels.